Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And you know what? If you've ever wanted to know what it was like to go from corporate product development to creating your own property group, then guess what? Today's the conversation that you're going to want to listen to until the very last word. It's going to be awesome because today's guest not only had a brief stint in the corporate world, in the financial services industry, he actually today is the head of an organization that has 75 properties that have over 850 units currently under management, which is somewhere around $300 million under management. He also, and most importantly, their organization has been serving their local community for the last 35 years. And he's also the head of a full service real estate company. He's the founder and CEO of Walls Property Group. I'd like to welcome to today's conversation, Preston Walls. Preston, welcome to the show, man.
Thanks, Billy. Great to be here.
You know, I am looking forward to this. I loved our pre-conversation, love your energy, very cool. And I know that everyone is going to learn so much about the place where you live and also what it is that you are doing with Walls Property Group. So looking forward to it, man.
You bet. Billy, I love your background. I love that you're evangelizing passive income and helping people facilitate that transition out of a wage job to a passive income stream. It's great.
Awesome, man. Well, I appreciate that. And you're going to help to continue on this journey with everybody. And you know what? As you know, I kind of like to ask everybody the same 5 questions. We're going to start with 2 in the beginning. We're going to talk about some things in the middle, and then we'll finish up with the Going Long final 3, which everybody loves. So first and foremost, Preston, help us understand, where exactly do you live in the United States?
I live in Seattle, Washington.
Awesome. So out on the west coast of the United States, some would say the left coast of the United States, and home to a couple of big companies. I'm sure we'll mention one of the or 2 of them during this conversation. I have a strange feeling. Awesome. So Seattle, Washington, and help us understand, Preston, what is the most positive thing that's happened to you in the last 24 hours?
One thing that I love about Seattle is proximity to water and mountains. Yesterday morning, I got a call from my buddy who lives up in the mountains and said, let's skin up and ride down. There was some new snow, so we did a couple laps hiking up and riding down. It's a great way to start the day.
Oh man, that is just phenomenal to be able to start the day, get some nice exercise, nice out in the elements, and just to be able to get away. So awesome, appreciate that. And so listen, the thing is, Preston, I talked about a couple of really high level things, right? About your life, about your organization, but I would really love for you to share with the entire Going Long family. Help us understand a little bit more about you, some of the major decisions that you made up until this point in your journey, and then kind of we'll see where we go from there. But give us a little bit about your backstory, please.
Yeah, I grew up in Seattle. I went to school on the East Coast, and I thought for certain I was gonna make my mark on Wall Street. And I worked for 4 years for a Wall Street firm, and I got burnt out doing it. My father was in multifamily development and property management. He was an investor, and the whole time he was gently pushing me, "Hey, come back to Seattle. Let's join up. I need some help on a couple projects. You can learn the business." And I said no for a while, but my breaking point came, and I remember it so vividly. I was 26 years old in my cubicle. It was like 8:30 at night, still at the office, and the managing director across the hall in his office was saying goodnight to his kids on speakerphone. And I didn't want that to end up being my life. And I knew I had to make a change from there. So headed back to Seattle and worked with my dad for how long? 6 years. We worked together, and we built a building together and renovated a couple others, and so I kind of learned the business from him. And he retired in 2008, right as the economy was going down. He said, "I've had enough. I need less stress in my life." So I've been running it since then.
Okay, awesome. So since 2008, he kind of took his step, exited stage left, and you then came on stage, which is great. You know, you shared something that I think will resonate with a lot of our going long family, right? In the very beginning, you mentioned that kind of episode where you're 25 years old, you're in your cubicle, and you're hearing your managing director say goodnight to his kids, and so I'm assuming that was probably not the first time that you'd heard the managing director say goodnight to kids, because I'm sure you probably did a lot of late nights. But I'm just curious, like, what was it about what you heard that made you think, I don't want to do this?
Well, you're in that environment. You're always aspiring to get to the next spot, the next level, right? And this was the guy's office that I was supposed to want to be in. And, I actually did not hear him say goodnight to his kids on speakerphone all that often, because most of the time he was traveling. Most of the time he wasn't even in the office. And so that combination of either not being around, just not being present for the people that love you and you want to be close to. I didn't have a family at that point, but I knew it was something that eventually I did want, and I couldn't see those two coexisting.
Yeah, I mean, it's definitely a challenge to be able to do it in that way. But the fact that you had that clarity already so early on, Preston, is something that is to be commended, right? Because you recognize that you wanted something different. And a lot of times people will just keep going along that path because, well, they don't want to dare do something differently. So you get this call from your dad, right? And he's always trying to bring you back home. I relate to that, by the way. Because I keep getting these calls. I've had them for the last 20 years, but I think by now they realize that I'm going to stay kind of where I am. But so you had these calls. You had this kind of thing that happened at your office at 25. You're in your cubicle. So what was it about that call from your dad, or those multiple calls, but that one call that you thought, you know what, I think it's time?
It was one timing. I was early enough in my career that I could make a change, and it was really painful. It was painful financially and to my ego. My dad paid me about 40% of my Wall Street salary, yeah. And that was hard to come to terms with. And what it gave me was a time to start building my own portfolio, building my own projects, my own income stream that would eventually take place and replace the need to have a salary. So yeah, at the right time in life, and being able to just absorb that near-term impact to cash flow was a really crucial part.
Yeah, and I love that you talked about that, because as people transition quite frequently, that is something that is a huge issue, right? Because you go from, okay, well, I was earning these, multiple, big salaries or multiple six-figure salaries or whatever they were, right? And then you go to something where you were making 40% of that, whatever the number was. If you're only making 40% of that, that can be a pretty big challenge. I'm just curious, with that happening, Preston, do you think a lot of that 40% less was because you were living in a new city, or do you think that was more by design by your dad to kind of help you understand how to adapt?
It was, I mean, he's he's very much a principal guy. So it was much more the latter. Right. And part of it, he couldn't disrupt the wage structure that he had, and he didn't want me to have preferential treatment in coming into this environment. But a lot of it was, this is the new reality of this environment, and you need to make do with what it is. I mean, a lot of our challenges where he and I would disagree on stuff came down to like how to approach money, or the philosophy of money. And coming from New York, it was, things are very, very polished and well done and very class A, right? And that's not the rest of the world, right? There's a lot of just the workforce housing out there, and you can't have the same budget depending on what your end user, your demographic is you're going after. So he and I would go around and around on those issues.
Yeah, so it's interesting, right? Because it's a lot of the family dynamic. Whenever you have, and I have a family, right? We're in our family, we have work together. Not me, but my brother and my dad, they work together. And so there's interesting these dynamics that happen within families, especially when you have the next generation that has a different point of view about where things will go versus where things have been, and to get you to this point in time. So we're going to come back to a little bit of that, but one of the things that I think would be really interesting, because maybe some people know about Seattle, they don't know about Seattle, they've heard, but they don't know, or they may not know anything other than Amazon or Starbucks, or, outside of Seattle in Redmond, there's a small company called Microsoft, I think. And so what I'd be really interested for you to help us understand, there's a lot of things that are happening in Seattle, but kind of help us understand some of the things that have been attracting people to Seattle, some of the different types of companies. I mentioned some of them already, but like, what are some of the big reasons that Seattle has been one of the cities, especially where in terms of the values continue to go through the roofs? Maybe you can help us, educate us a little bit in that respect.
Yeah, Seattle, like a lot of coastal markets, is really interesting, and it's driven by job growth, right? Amazon especially has been the primary driver of really high wage jobs that are creating demand for a lot of new housing units. And so that pushes up the market. Rent growth has been really, really strong over the past, say, 20 years. And there'll be dips along the way, but we expect strong rent growth to continue based on new jobs coming to the area. And what that does from an investment standpoint, I mean, normally think of these assets as cash flow producing assets, but when you're in an appreciating market like Seattle, it's more of a capital appreciation market, and you're essentially buying your cash flow 5 or 10 years in the future. So cash on cash is not really a metric that works in a near term horizon for investments in highly appreciating markets. I tend to look at metrics like value creation, right? Once I construct something or renovate something, how much more is it worth than it costs to produce?
So I love that you just said that, because I was just going to say, well, help us understand what value creation is. But you just gave us the definition of what it is, which I think is fantastic. And also, it's fantastic that you help us understand the different types of markets, because when you talk about appreciation, Seattle is another one of those types of markets. I remember when I was getting started in real estate, I wanted to create cash flow, and I was trying to figure out why what I read in Rich Dad Poor Dad didn't actually work in Barcelona where I was living. And then afterwards I realized, a number of years later, okay, I'm in an appreciation-based market, so the numbers are never going to work if I try to figure out if I can get $200 a door, or it would be really, really difficult. I mean, I've learned things how to do since then, but just having that difference of appreciation market versus maybe a market where you were going to be able to produce cash flow. And one of the things I would recommend to the Going Long family is on your website, you have a great demonstration of how you are creating value. And so basically, and I don't know if you want to maybe talk a little bit about how, but it was probably one of the best things I've ever seen, Preston, in terms of the way that you're showing investors when you have a property, when you place it in your portfolio versus what its current market value could be or what the projected market value may be. Maybe you can talk a little bit about how you continue to help to educate your investors or those individuals that are consuming your services.
Yeah, I mean, real estate investors particularly have this focus on cap rate, right? And cap rate breaks down in a capital appreciation market, right? Why would you buy a 4.5 cap in Seattle when you can go to so many other markets and get a 6 or 7 cap property, right? And the trade-off is the cash flow for the higher cap property will be higher in the short term, but ultimately it will lose out significantly in the long term. So if your time horizon is long enough, a capital appreciation market should always be a better investment. But the trick is you've got to be patient and be able to hang on long enough to get through those lean years on the front end. And that's a hard, challenging part, but it's what's really made my portfolio work. And a lot of the way that I harvest gains, because I don't like to sell, is through refinance. So as property values go up, do a cash out refinance. And I mean, most of the properties have debt on them that's greater than the purchase price now. And I'm able to take that money out and redeploy it into new investments.
Which I think is fantastic. So, I mean, you're helping us to get some insight into a couple of things that are very important. Number one is, what is the time horizon that an individual may be looking at, right? And based on that, if you're looking for something that's cash flow, you're going to need probably a shorter time horizon, right? If you're really looking to generate wealth and you have the opportunity to wait on a longer time horizon. I don't know if you would say that a longer time horizon would be somewhere between 7 to 15 years, something like that. Would that seem about right, Preston? Or
I define it as more than 10 years.
More than 10. Okay.
So no upper end bound.
Okay. So no upper end bound. So and I love that. And this is also one of the things that ties in really well with what we like to talk about here is the Going Long podcast, right? We want people to feel much more comfortable as well as confident investing beyond their backyard. So you used a great example. If you have a 4.5 cap or a 4.5 cap rate, capitalization rate, you may want to get a potentially higher return. And so that will, then you'll look outside of your own home market, which may not be an appreciation based market. And when you're doing that, it's typically, would this be fair to say that it's because you're looking for a shorter time horizon or less than that 10 plus horizon, typically?
I'd say you're looking for something different. You're looking for current income over more than income in the future or capital appreciation.
Okay. All right. Well, I love that. So you're looking for different things. So let's jump in a little bit. So because you talked about how you're creating value, and I would love for you to tell us, specifically what it is you're doing with your company, Walls Property Group. And I know that there are multiple different companies, but just in general, in terms of value creation, what is it that you are doing differently to really help your investors to be able to generate the types of, and we'll focus more on the investor part, to be able to generate the types of returns that they're looking for. And that could be a number of different things.
Yeah, there's two main types of strategies that I pursue. One is value add renovation. So taking an existing building that's tired, run down, and reposition it through new finishes, sometimes through new configurations. How do we use space more efficiently so that the utility is better, and creating new habitable spaces within the existing envelope of the building. So things like storage spaces and laundry rooms and garages that can all be converted to habitable space. So, and then also ground up development, new construction, completing construction on a 61 unit building in Seattle. It's been a long time coming. It was a tricky one to do. It's on a steep slope, and I had some easement and right of way issues to sort out in the entitlement. So it was a long time getting there, but because of the challenges, nobody else wanted to touch it, and so it was very attractive by getting in. But those are two ways.
Okay, perfect. So you've got the ground up development, and then you're looking at the value add renovations. So one of the things that you just mentioned, and it may be a new term for many of our going long family, but if you could just help us understand, when you were talking about the development, you mentioned something called easement. Can you help us just understand what do you mean by that when you talk about an easement?
An easement is some right of way or egress over your property that someone else has. So in this case, the property is up against an interstate freeway. It sits above it, but the Washington State Department of Transportation had a no-build easement because they didn't want the weight of a building up against their retaining wall. So we worked with them to remove that easement, that deed restriction on the property, so I could build on that portion of the lot.
Okay. All right. Perfect. So that helps us understand. So, and I know that you have a rather large team, right? And can do a lot of the things that you're doing within the overall group. You can do a lot of the things in-house. And I know you, as you're doing development, you're doing value add creation, sometimes people will want to understand, all right, well, how much is actually being done by this specific company, and how much of what you are doing is outsourced? And I know that can make a really big difference in a number of different things. But can you maybe help us understand, because I know you have a lot of experience in this, when, like maybe an example of when you would typically have something and you would keep it in-house versus maybe having something outsourced, and we may want to look at a development project as well to make it a little bit easier.
My default is to do as many things as possible, or have as many things in-house as possible. And there's a lot of different schools of thought, but I've
Why is that
landed.
For you?
Well, I like to be able to control as many variables of the process as possible, right? There are so many decisions, there's so many assumptions that you need to make, there's so many things that could potentially go wrong. And I don't like the possibility of outsourcing that risk to a consultant, to a third party who doesn't have the same just skin in the game that this one individual has. I want to keep it all together and keep as much cohesion of decision making as possible.
Yeah, and so when you start looking at that whole cohesion of decision making, it really comes down to two words that you said, and I think this is really important because this comes down to each and every individual or corporate culture. But here specifically, you will focus on number one, control and risk mitigation, right? Because when you're able to see that, is you can control more of the outcome, and by being able to have better control over the outcome, you're in essence mitigating the risk. So talk to us a little bit about how you have some of your teams organized as well as systems set up, because then that also takes us back in terms of control and how you're able to mitigate risk and also more efficiently serve your clients.
Yeah, I set up the company so it's able to service all aspects and cycles of a real estate project. So I have a property management team that includes leasing and maintenance. So all of the maintenance is in-house and on call, and 24 hours a day we have access for emergencies. The leasing staff is there for lease ups. And right, lease ups can look different ways. It's not always a building that gets delivered all at once and you have all these units coming to market at once. Sometimes it's a renovation that's completing a floor at a time, and so you have a limited number of units that need to get leased up quickly, and that having a leasing staff in-house allows for different strategies, right? Sometimes you're managing your building for cash flow. You want to keep it full. And sometimes you're managing it for a refinance, right? You're willing to take some vacancy to get a higher lease rate to be able to show the bank, because it'll appraise for higher value.
Yeah, that's fantastic, because you're now even taking us into some of the different financial strategies that you are able to employ to make sure that you are once again being able to serve the end result and the end client that you are that you're looking to serve, which I think is absolutely phenomenal. And I guess, before we get into our going long final three, Preston, I do have a question for you, and it's really about how you are, like, someone wants to know more about you. Like, typically, how are you working with your clients? People that are looking as investors, are looking more into the Seattle market. What does that process look like?
So we have a group of limited partner investors that invest in both our renovation projects and ground up construction. So we form a new LLC and get a new group of investors for each project. So it's project specific, and we develop the documents, business plan for that project and send it out to investors.
Okay. All right. Fantastic. And we're going to give you a chance to tell us a little bit more about that here coming up. But as I mentioned, it's time to get to the going long final three, Preston. And the thing is, here's the thing. Like, everybody knows, I never ask the going long final three unless you tell me you're ready for me to ask you. So my question is, are you ready?
I am ready.
All right, here we go. So we're on to question number 3, but the first of the going long final 3, which is, we started over on that side of the pond, and now I like to bring it back here to Europe. And I always want to know, like, help us understand, Preston, what is your favorite European city, either that you have already visited or is still on your bucket list to visit?
It is Megève, France. I lived for 2 years in Geneva, and it's a fabulous ski town that retains its quaint, just historical nature, and it doesn't have the same commercialization as Chamonix, but it's in the valley, headed toward Chamonix.
I love that. So. You like the snow, man. So I see a theme here. So here's question number 2. And the thing is, like, all really successful people have only made one mistake in their entire. Okay, well, I keep getting that wrong every single time I get it wrong. Anyway, no, that's kind of a joke. No, I make them all. Yeah, exactly. Like everybody who's successful. And so I know you've made your fair share as well. And so I guess the important thing is, Preston, if you can think of like one lesson that you learned from the mistakes, like what is that one lesson that you would quickly share with the Going Long family?
From a developer standpoint, from a buyer of real estate, owner of real estate, it's not giving up control or retaining control of properties. I learned it's better to take a smaller property and own it 100% than a larger property with a partner where decision making is split. Because inevitably, if you go far enough down the road, opinions are going to deviate on some decision, and it's going to create stress that could lead to selling that property.
Got it. So looking to realize the importance of control, respect and understand that, especially on the complexity. I'm adding this part, but especially depending on the complexity of the purchase. So absolutely makes sense, which leads us to going along question number 3, and we're going to wrap things up. What is the one book that you would recognize or recommend, to the Going Long family?
It's a little long, but so worth it. A biography called The Snowball by Alice Schroeder. It's a biography of Warren Buffett. And if there were ever a long-term investor for passive income, the beauty of the book is it's not just about his investments. It's all of his life decisions that go into this very, very long-term focus and retention of assets in a very long-term way.
Awesome. So the Snowball. So we're going to Alice Schroeder. We are going to include those in the show notes. And the thing is, like, you've had and shared so much greatness with us, Preston. I mean, just thinking about your days in Wall Street, you in that cubicle, seeing the boss say goodnight to the kids, recognizing that's probably one of the very few times that they actually said that. It had something that clicked in you. Your dad was calling you to bring you back home at the same time. It was the right time. You went back. You have made that transition from the corporate world into your own world, into your own, creating your own future, taking on the next generation. And you know what, being able to help both your residents, being able to help investors, and you're doing things that focused on value add renovations, on development, and continue to focus on value creation. And I know that there's so many people that are part of the Going Long family that are thinking, oh my gosh, I got to get in touch with Preston. Like, help us understand. Preston, what is the best way for the Going Long family to get in touch with you?
Through the website, wallspropertygroup.re.com is my website. There's contact forms on there. That's the easiest way. Or my email is preston@wallspropertymanagement.com.
Cool. Preston@wallspropertymanagement.com. And then we're also going to include the website in the show notes. So Preston, I want to thank you, man, from the very bottom of my heart for investing your time with me and the entire Going Long family. It's been really, really awesome. And thank you so very much.
Oh, Billy, you're doing a great job. I love your mission. I love your ambition. I love your drive. I love what you're doing. And I can't wait to see how you transition into full-time passive ownership.
All right, man. I appreciate that. Really, really appreciate that. And I'm just going to take like 30 seconds to say a couple words to the Going Long family really quickly. Listen, Preston left so many great nuggets here today. He's helped you understand more about what you can do. He's helped more about how you can make the transition, helped you understand more about value creation. He's helped you understand more about Seattle, the market, some of the drivers as well. And you know what? You have a very unique opportunity to go out and make a positive impact on 2 or 3 people that you know. Like, share today's episode with 2 or 3 other people. And you know that there are people that could actually really, really use the encouragement as well as the education that Preston shared with you today. So go ahead and do that. And also too, let Preston and I know through a very honest review of today's show. Like, let us know what you liked. Let us know what you want to hear more about so that we can share that amongst one another. And as you know, I go through every single one of the reviews. So leave an honest review. Let us know what you think. And it's going to help also bring other like-minded people to the community. It's going to be fantastic. And so I know there's a lot I could say, but I'm going to wrap it up now because I am super excited to welcome you back on the very next conversation. And until then, go out and make it a great day. And thank you very much. Wow, don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long-distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.